All right, guys, let's get down to it and make you some money. By the way, I'm really rocking. You guys should be making a lot of money. You should be asking your friends to watch this show. Now, I like this Chevron here, CVX. You guys know I have this oil report. It's open to anyone who wants it. And here's the thing. I like the action on it here. And we talked about earlier looking long term. On March 10th, they had an investor conference, and they more or less laid it out. Their dividends intact for the next few years, no matter what. They've got the strongest upstream and downstream earnings in the business. Long-term demand is going to be up over the next couple of decades. Liquids particularly, but the gas is going to be huge, particularly liquefied natural gas, which I absolutely love. That's going to be up 100% by 2025. And here's another interesting thing. You know, we keep talking about CapEx being down. Well, for the small and mid players, it's down 37%. For the large caps, 30%. For the majors like a Chevron, only down 12%. That means when it's time to turn it on, they're going to have a serious advantage. So, you know, trying to pinpoint the exact place to buy these is tough, but I like Chevron here. If you don't have any presence in oil, this is one of the maybe three that I would be pounding the table on. Hilary, what do you think about this one?
If you're going to hold Chevron for 10 years or more, absolutely.
What about 10 days?
No way. The problem here is that $38 billion in free cash flow came in, $35 billion in CapEx was spent. And Chevron had to borrow money in order to pay its dividend. Now, all of that being said, the reasons are a lot more compelling that you gave, and Chevron's a great long-term hold. But do be careful, because a lot of these companies, like Chevron, have based their projections on maybe $70 a barrel oil, and that's where it can get dicey.
I like the name. You know, it's a high-quality company, a strong balance sheet, and if oil stays lower for longer, you have a nice dividend while you're waiting for recovery.
People were concerned about Chevron in 2008, also about free cash flow, and they raised their dividend that year by 12%. So they'll get it done. We also complain about companies not investing. These guys are actually more committed to CapEx than almost anyone else in the space. And also, as long as oil stays low, they will take more market share. So again, I really do believe this is one of the power players. Might be some downside, certainly, given that oil is under a lot of pressure, but I think going forward, this is one of the companies to own.
Major diversification, a lot of money behind it. It's forming a triple bottom at 100. It's forming a base. That's a very good sign. It's kind of doing, not really trading with oil as much as trading on its own. And again, 4.1% dividend to sit there like this. Build a position here for the long term.
Thinking about the chart, though, someone who's more short-term does buy it. Is there a stop loss that you use from that chart?
Yeah, probably about $95.
What do you think, Chris?
I think you can dollar cost average over an extended period of time. I mean, I don't know how this year's going to play out with oil. I don't think anybody does. But if you average in long-term, you're collecting a nice dividend, I don't think a long-term investor is going to be hurt.
All right, guys, in the market.